Keeping an eye on shares of Chevron higher this afternoon after the oil and gas company posted a record second quarter results. It outperformed expectations. They used some of that cash to pay down debt. Things right now seem to be going well on the price side, but still some big concerns about what's been going on in the Middle East and also in Kazakhstan. The CEO, Mike Wirth, speaking on a conference call earlier, says little evidence of demand destruction. We're also been keeping an eye on the situation in Kazakhstan, and we learned less than an hour ago that the Caspian Pipeline Consortium says that it will continue oil operations after considering an indefinite halt that would have threatened the Kazakhstan's ability to supply the world with a crude. Joining us right now to break down what happened over this past quarter is the CFO of Chevron, Eimear Bonner. Great to have you here on the program, Eimear. And before we get to some of the quarterly numbers, I do want to ask you about the situation with the CPC in Kazakhstan. Mike Wirth addressed this on the conference call earlier today. It looks for right now that he did seem to confirm that Chevron ships had been loading up earlier this week, and based on what we're reporting right now, that the CPC will continue to allow ships to continue to be loaded up. Are you aware of that?
Thanks, Romain. Thanks for having me. Specifically on CPC, the terminal is open. Yes, that is what our understanding is, and the loading is continuing as well. And our asset in Tengiz that exports oil through that pipeline is also operating. So that's the news that we have.
Have you been sending?
With regards to the
Go ahead,
the quarter, can I maybe move on to the quarter? We had a really strong quarter, strong operational performance across all of the assets around the world. The key assets were at or near full rates for the entire quarter, so that strong operational momentum resulted in record production in the US for the quarter and record refinery throughput for the quarter as well.
Give me some sense here as to sort of how you sort of map out the future, knowing that some of this is obviously coming from the temporary bump up that we've seen in oil prices. If we believe it is indeed temporary, we're averaging more than $100 a barrel in Brent in the past quarter here. Is your expectation that average prices will sort of remain there for some time?
Well, the reality is that there's quite a lot of volatility right now, and we've seen that over the last 5 months. So that volatility, whether it's geopolitical or market volatility, is something that we have to operate within. And so what we focus on is what we can control. And, you know, we don't count on prices. We don't set prices. What we do is we produce into these markets, and we want to ensure that we're producing all the energy that we can and delivering that energy that the world needs. And so that's what we've been focused on.
Well, you got a 20% bump up in production is what you've telegraphed to the market, though I assume that is tied to your general outlook on prices and as well as supply coming from other areas?
The 20% production was part of the plan that we had coming into the year. So we have not adjusted our production in light of the prices. We had a plan in place. Our plan was assumed growth, growing in the Gulf of America, so in the US, growing in Guyana, growing in the Eastern Mediterranean. So our plan assumed growth and will continue to grow this year, 7 to 10%. So we did not change any of our plan because of prices. We take a long-term view, a through-the-cycle approach to our plan.
Well, I'm curious, with regards to the long-term view, and this is still on the situation going on in the Middle East. I mean, you signed accords with Iraq, a couple of weeks ago, obviously with them focused not only on production, but also on the potential, maybe, of trying to find a pipeline that could actually bypass the Strait of Hormuz.
Yes, so we have been in active discussions with the Iraqi Prime Minister and his teams on a number of options for the future. So this is something that we work well in advance. I mean, part of our business is that we produce 4 million barrels of oil per day, and we have to replace that. So we're in a depletion business, and so stacking options for the future, competitive options, is part of doing business. Iraq has some of the largest discovered resources in the world, so we like like Iraq for that reason. We have exclusive negotiations underway for an asset in West Kurnitoo that is a producing asset. So any progress there would come with immediate production. We also have another area called the Nasiriyah field that offers opportunities for growth as well. And then as part of kind of an imagining what a business might look like there, we've also discussed what another export route or export alternatives out of Iraq would look like. So this is all part of our efforts to ensure that we have competitive options stacked up for the future. And at the end of the day, we will have to make decisions on those at some point. But that's what we're doing in Iraq, is looking at these options with pace.
Well, let's come back a little bit closer to home here and talk to me a little bit more about the Guyana assets and the idea of when you start to see that show up in terms of some sort of meaningful contribution to the top and bottom lines.
Well, Guyana is meaningfully contributing today. It was part of the Hess integration. When we closed the transaction last year, we were able to integrate their assets. Guyana was one. It's a terrific asset. We're very pleased to be part of the venture. It's got a strong queue of projects. It's very well, performing very well. We also integrated other assets into the portfolio. So we have the Bakken field, which is in North America. We have integrated that into our shale business. And then we also had Gulf of America assets. So the Guyana asset is a major asset within that portfolio, but that is part of the reason why we've been able to grow so much year over year.
How much of that 20% production growth number is that? How much of that is coming from Guyana?
Well, overall, about 250,000 barrels a day is the potential of the Hess portfolio. So that's contributing. That would be on an annual basis, so half of that.
You obviously are getting a lot of credit here for helping with that integration, particularly on the cost side here and realizing some of those synergies here. You came in above target, at least what you had originally promised, with regards to some of those cost savings and synergies. Where did that extra come from?
Yeah, well, there was a number of things that we looked at as part of integration. One, we had a number of operations that had footprint that overlapped, and so we took advantage of that to really streamline, basically bring the best of both. I think the two areas I'd focus on is the Gulf of America and the Bakken assets. So when we integrated the Gulf of America assets into the portfolio, we were able to share costs such as shore bases and logistics support to those offshore fields, and with that comes cost reduction. So that was part of the synergies. In the Bakken field, we were able to look at the development plan and ensure that we could keep the same 200,000 barrels a day going with less rigs. And so that was a combination of best practices that we deployed from the Permian asset and the DJ assets to the Bakken. But we had some of that come to our Chevron legacy assets as well. So those would be two examples operationally of where we were able to deliver synergies. We also had some corporate costs, some put options that we cancelled. And then finally, we also had a lot of net operating losses that we were able to use given our large North America production. So those are the things that enabled us to go from $1 billion of synergies to 1.5 billion of synergies.
So overall, as we kind of sort of wrap this up and we take a look back at the quarter, the big windfall here, you obviously used a lot of that money to pay down some debt, which investors seem to like as well. When you look at some of the disparities, though, that we see with regards to the trajectory of prices in or the oil space, the crude space, relative to some of the refined products, the idea that some of those fuel product prices are staying higher longer than what we would see with regards to some of the unfinished products here. Are you doing anything differently or more aggressively to try to capture a little bit more of that windfall while you can?
No, we're not doing anything differently. We're focused on operating with excellence and obviously trying to bring energy to the world, products to customers. What we focused on is optimizing the levers that we have. You've seen the quarter that we had a U.S. production record. That was something that we were able to deliver. We also delivered a record in refinery throughput, and so that enabled us to capture the margins. But it comes down to optimizing using the levers we have, the crudes we have, the kit we have, and maximising value that way. And I highly expect that we'll continue to deploy some of those learnings and some of those gains operationally in the quarters to come.
Eimear, really appreciate you taking time for us. Eimear Bonner, the CFO over of Chevron. The share is up for a third straight day, a fourth straight week as Chevron closes out the month higher by about 20%.